Good morning, everyone. Good day, everyone. Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen. And once a week on Monday, 6 o'clock, we meet here and talk about cycles, cycle analysis in the stock market, and at least 20 to 30 minutes. Let's review some data sets. Let's discuss a little bit what the cycle analysis shows us for the specific data set. And if you like, join the live chat here live to drop in your questions. I'm here to try and get back to your questions. So to keep it a little bit also a live discussion on your current questions. So the purpose, what we're doing here, if you are new to this channel, we meet here as members, guests of the Foundation for the Study of Cycles, and we apply, at least here in this session on Monday, digital signal processing techniques for the analysis of cycles to data sets, and in specific in the Monday show on stock market data sets, to see what cycle analysis shows us as dominant cycles or important cycles, which digital signal processing would identify. That's what we're doing as we are interested in detecting, analyzing cycles. This does not always mean that the cycle is there or that a cycle has some meaning in projection. That's up to the researcher how you value the analysis. But anyhow, we want to learn how to detect cycles, and then we have various discussions here live if you should trust a cycle or maybe even not trust a cycle. That's the purpose. We want to learn, we want to understand how you deal with cycle analysis, and therefore let's spend 20 to 30 minutes each week and see what it does. Okay, that's the purpose. Today, I want to review two topics. One topic is, and this was requested, is around Tesla. Or let's review just the Tesla stock market data, which is interesting in regards to the current movement, interesting to its kind of parabolic move, and it's interesting, can cycle analysis help us in this kind of data set? So that's one topic as follow up by one request. And the second topic for today is I want to have a short update on the Bitcoin cycles. As you know, we are monitoring dominant cycles in the cryptocurrency for a long time. There are key cycles which we currently monitor, so we will revisit where we are in this cycle. So these are the two topics you can expect in the next 20 minutes. And at the end, for sure, I will review your questions, so don't hesitate and drop in your questions. Okay, that's it. Let's get started. Tesla, right? Let's open our cycle analyzer, which I will share here in the back. That's the purpose of our analysis. And now we will load Tesla data. Sorry, there seems to be some traffic work outside. Just closing the window here in the office. So Tesla, and we will pull up the data set from which is provided from Yahoo here. So I will just use the standard procedure, which every member can do with our cycle analyzer, which is the basic tool we offer to you for cycle analysis. So you can pull up any data set. So this is now the daily data set of Tesla, what I'm showing here. So which is then brings us to the question, okay, can we identify cycles in this data set, or concrete here in the Tesla current market behavior? So the basic procedure, how cycle analysis works, and let's start from ground starting point, basic analysis. You will pull up this data set. You will run the cycle analyzer, which is mainly digital signal processing, providing some kinds of Fourier analysis without going into the details, which then pulls up a spectrum chart, which we see here in the bottom of this analysis. So these kind of spectrum charts identify peaks. So if you see a peak, this is a special spectrum chart where I explain in a second here, But what you're normally doing here, so you're looking for these kind of sharp peaks. At least you will find sharp peaks in a spectrum, and each peak correlates to a specific length of the cycle. Yeah, you read the spectrum here from left to right, and the x-axis represents the cycle length measured in the time domain we are using here. So here we are talking about daily cycle lengths. So if you identify a peak, which would then give you the kind of amplitude of this cycle, and if you find clear peaks in the spectrum, which means at least the digital signal processing is able to detect this cycle length in this market data. That's the basic usage or the basic starting point of using this kind of approach to whatever data set. So what you see here is, and this I think was also the question why you brought this in, we don't see a clear peak in the spectrum. Yeah. So this is not this means there's a lot of going on in this data set, but there's no clear individual cycle which could be detected or identified in this data set. And that's also a kind of learning, yeah, and result from the cycle analysis. Because if you put in financial data sets, cycles are not the only rhythm which might be, or root cause which might drive emotions or specific behaviors or influences. Financial data sets are very complex in regards to what drives the current behavior in these markets. Cycles could be one force. And sometimes you will find periods of time where cycles dominate other factors. Then it's very interesting to know about the current cycle. And sometimes there are periods of time when cycles are not the main or the dominant driving force in a market or specific data set. So therefore, that's quite the normal way of starting your analysis. And now the next question is, okay, can I get a clue out of cycles of this data set? Or why can the spectrum don't give me an answer on cycles? So therefore, I think it was a very good question, because it's not always the case you just simply find a cycle, like, for example, in Bitcoin. If I switch later back to the cryptocurrencies, there is a clear cycle visible, while here is a different story. But we can, there is an explanation why I even wouldn't expect a very good spectrum analysis on this data set, right? So, because if we have a closer look, what is your input for this analysis? That's the dark blue area of this analysis here. So starting in May 2018 up to today's date, right? So, and what you see here, just in terms of analysis, there's let's say from a flat line, and then call it a very strong uptrend or a parabolic move starting here. So a little bit different of how you read it. But anyhow, if you have such kind of very strong trend, I mean, this is not a slight uptrend. This is a very sharp uptrend, which at least with this a period here taking into account, would not allow any cycle detection algorithm to check for cycles here, because this strong uptrend of the simple input data you push in will override any possible cycle in there. So for sure, the data set will be detrended. Yeah? So detrended is an important factor in pre-processing, and this is embedded, and you can configure this without going into the specifics of detrending. But if you detrend such a strong, simple, straight up line or even parabolic up move, and if you take out the parabolic up move, if you take out the strong uptrend, it will become more or less a flat line. Yeah, and if you then bring a data set of a flat line, so the detrended version, into a cycle analyzer, the output will look like similar to what you see. So that's the topic you should be aware of, or get an understanding or a clue first, how the input signal looks like. And the input signal in this case, as you know, detrending will be applied such a strong, and it's just an uptrend. If there are different trends in the data set or long-term trends, so for example, if we would have a longer data set which would have included maybe one or two of these uptrends, then it would be a different story. Yeah, but we don't have that. Yeah, we just have a straight line and one strong uptrend here. So therefore, this would not allow whatever cycle routine you would try to use. Don't try to squeeze cycles in this red line here. Would simply not possible. So okay, that's a kind of simple explanation of why you shouldn't expect the cycle analysis with this input data to give you a clear spectrum. So I hope this answers a little bit your question. So you should not dig into the numbers here too specific and get too crazy on the numbers here. So you cannot try to squeeze in some cycles here. But yeah, anyhow, I would be careful here because now it's more like curve fitting whatever cycle to pass data, but you couldn't detect a real cycle here. So therefore, that's the purpose. Cycle analysis would fail on these kind of data sets. So don't do cycle analysis. What can you do to mitigate this problem? So that's then the next question. What can we do? I said detrending alone might not help here. So the next topic might help. Add more history to your data set. So maybe if you add more historical data set, then maybe you have some ups and downs in this data set, which would help to identify if there have been cycles in the past. So you could load more data into the cycle analyzer here, but from a long-term perspective, yeah, if you just look here, the parabolic up move here, and we can add even the overall history of, well, we now go back to the year of 2010, so we can use over 10 years of daily data here. However, the parabolic or the straight up move here from around 100 to whatever here in Tesla would not allow us to get a real clue here. Yeah, so I mean, that's in terms of scaling, you can switch to the log scale, but even the log scale would not change this perspective here. So at least what you can do now is go to a point in time before this strong uptrend, whatever was the impact, started here, if you stay on the daily time frame here. So you could then go, or you should end your analysis somewhere here 1 year in the past. So I'm now selecting September, August, 2 years in the past, 2019. Yeah, this is a point in time just before the strong up move, and then refresh or update the cycle analysis, because what we now take into account is this kind of data set before the strong uptrend. I mean, this would not. These are cycles which you could identify in Tesla before the strong uptrend 2 years ago. So even though this is more an historic analysis of Tesla, it's just a one-time analysis. So I think this historical analysis would not give us any clue on today's or even a projection into the future. So you see here, just to explain now, the spectrum looks much better. Now you see peaks in the spectrum, which we have not seen if we include the straight up line. So if we add more historical data, if we exclude the strong uptrend, which was just the one-time situation starting 2 years ago, you see clear peaks in the spectrum, okay? So that's the explanation of why a spectrum might look like this. However, now we are going back to historical analysis, which is good for research, which might explain past cycles, but even the outcome could not be of much value if you don't know what you do with this historical analysis here. But that's daily cycles. So what else can we do? Another topic would be now you move up on the time frame. So you now move maybe to weekly or monthly cycles to get a more compressed view on the historical data. However, it would anyhow not help us because, yeah, as I said, in Tesla, we just had this one up move here. So, and that's now a key point I want to make. I would be careful with analyzing individual stocks in this case on cycles, because cycles try to find a common rhythm in your data set or in the market you are analyzing. And if you switch to individual small assets, like an individual stock would be compared to the overall market, this individual stock is more than related to what, from an engine perspective, is called noise. Yeah, so maybe one-time disruptions because Elon Musk is just twittering something if he likes or dislikes his own company. This will have an impact on the stock price. But this is not a main rhythm in the underlying asset or asset class. This is, from a digital signal processing, this is just noise. It's just a random impact. Maybe then not noise, it's just a random, a single impact, yeah, which will not repeat, which is not regular, or even it's media noise, which will cause heavy fluctuations in the market. But this is not driven by a main rhythm. So therefore, anytime you move to individual stocks, it gets more and more complicated to isolate cycles in these data sets. So therefore, if you are new or if you're starting with cycle analysis, I would always recommend stick to the larger asset classes instead of trying to squeeze out cycles in individual stocks. And as I said, the noise to signal ratio, if we call the signal the cycle's impact might get much smaller on individual stock, as if cycles maybe would drive then as a generic. Okay, so we are back again. And the stream is continuing, right? So I need to excuse, we had an interruption in the network conditions, which just caused me to restart this stream. But now we are back again, so I will continue now. Just a second, but I think now we are live. Yes, we're live. So, okay, my God, the construction outside just ramped down everything. Yeah, but I was explaining the current Tesla situation. So instead of analyzing individual stocks, and if we want to stick to the situation in Tesla, for example, let's see if we get a broader index on electric vehicles. So instead of analyzing just Tesla, which I explained, we can't identify cycles, at least not if we look at the current last 2 years. There's a reason for that with digital signal processing. Then let's see if we find a broader index, which includes, for example, Tesla. And that's the topic I want to explain now with you. So what always makes sense, and I explained to you why not using the individual stocks, you could look for ETFs or global market funds which contain more than just one stock, which for this case here, for example, there is the autonomous electric vehicles ETF, yeah, which tracks companies involved in the market where Tesla is in, so in autonomous vehicle technology and electric vehicles and components for these vehicles. So this then would be a way to deal with the fact that maybe just looking at Tesla, it's influenced by one-time events like Elon Musk is freaking out again, which is not a cycle, but which would make cycle analysis on this individual stock impossible. So why not analyze the electronic vehicle market and see if their cycle analysis can help us, right? So doing this kind of cycle analysis, we're doing the same way. We are now just using the ticker, yeah, which in this case is just DRIV, yeah, which is the ticker symbol on the stock market. And you know that we are wrapping the Yahoo financial data, which you can pull in the cycle scanner. And therefore, let's do that. Let's put in the ticker symbol and add the abbreviation to pull the data from Yahoo Finance. So this now gives us, instead of one stock, a view on a kind of market spectrum, so which is much brighter than just one stock here. I mean, we see a similar up move in this industry, but maybe we can add more data here also to this data set. No, this index, and therefore we have the same issue more or less. The index started in 2018, so we won't get more than 3 to 4 years of data. So we still have more or less the same issue, but that's the procedure of doing this kind of analysis here. So even if I can't squeeze out cycles in this industry, that's the way how you deal with the situations when the spectrum might look like this. You have similar input data, and you're not able to switch to broader markets to analyze. Then that's the shortcoming of cycle analysis. Cycle analysis does not work always, and also maybe related to the data. However, in this data set, there are some more cleaner cycles here, but be careful. I mean, even if we see now clearer peaks here, so it's not as extreme as we've seen in Tesla, so the detrended version of the market might allow to have a look, and I would maybe just use these three here, just from the Bartle score and the strength score. These could be 3 cycles to start with, even though we need to be very careful with this data here. So then you could, because we don't have much data here, but what you can now do is try to align the cycle here with the timing information we have. I hope you know about it. Cycles deal with points in time, not absolute price movement here. So what we try to find, if we find this rhythm here in the market, which then skipped this situation was skipped here, but then we are now here. So since this point in time, this cycle is out of sync. So we don't know if this cycle, which from the cycle analysis or detection point of view was valid here during these times, but in September 2020, it has gotten out of sync, but at least, okay, maybe from, you could count this up move here and then this sideways move here, but we don't know if we should deal with it. So a possible reading would be, even if I don't like it, but we're here to learn something. So even though I would not use it in any real projection, in the past, or let me make it a little bit larger here. In the past, up to 2020, this cycle worked here from catching the tops and bottoms. So let's see, this rhythm here is fine. So, and then at this top here, let's switch the color here maybe to see now where we have a different situation. So this period here, I've not switched the color, why not? So this period here, which from a cycle projection should be a downturn, resulted in a sideways move from here to here, right? So this, instead of a downswing, we have seen here the sideways move in the market. So this happens in very strong uptrend. So it looks like this is now a very strong uptrend, which in the cycle downturn just resulted in stopping the uptrend here. Yeah, right? So, and this is then what happened. So then the next upswing again started, But now and then we have the same period from here to here, which is a downswing, and then started into a sideways move here. Yeah, and in Tesla, we saw the down move, which then gave us the situation here in summer. So July, the next upswing into, mid of October here. But, and therefore, that's the topic I mentioned. I would be very careful because for the last 2 years, the upswing phase of this cycle was helpful, and the downswing phase of this cycle just paused the upswing. And the cyclic behavior stopped in summer 2020 here. So the last year, we need to treat this cycle with a lot of care. And then we could add the longer one here, which also shows up in the spectrum. But therefore, we don't have enough history to validate a 1-year cycle. Yeah, so 348 days is more or less a 1-year cycle. But if we just deal with 3 years, we don't have enough history to really have a validation that we should use this cycle in any projection. So therefore, that's what I said. Going further from this point here, then you start to squeeze out cycles where there are no cycles, okay? So that's the point I wanted to make on cycle analysis in Tesla or the electronic vehicles. Even if I need to excuse that we can't identify cycles, I wanted to explain that this is often the case, and there are situations when you will not be able to find cycles in a data set for different reasons, and then you should stop trying to squeeze out cycles of a data set because you get too deep into curve fitting or trying to see something which is not there. So, okay, that's the topic on Tesla and electronic vehicles and the ETF. And now finally, let's have a short review on the final situation and behavior we saw in Bitcoin. If you remember 2 weeks ago, I did this review on Bitcoin. Then last week, we talked a little bit about dynamic behavior of cycles, where I also need a little bit to excuse. I was not able to do this live. So normally every Monday is a live session, just in case something special happens. But was the dynamic behavior. And today, let's shortly visit how the status in crypto or in specifics Bitcoin looks today. So I think we all know that in the last 2 weeks, the strong uptrend came to an end, or even we saw a pushback here. I mean, the movement in regards to the size should not shock anyone related to Bitcoin. So therefore, the overall movement is not so important. But in regards to cycle analysis, so the main cycle I want to take into account, and let's add some more data here because you know that I started anyhow with this 200-day cycle here, and I explained in previous meeting why the 200-day cycle is so important. Yeah, so that's now the reason I want to start here with, and the 200-day cycle is clearly there, so there's no change in that. Yeah, so and if we start with this cycle here, and this is what we are observing since summer. I told you here in this channel why monitoring the 200-day cycle, and and I can now add the other ones which are found in the spectrum, but they would not change the overall picture. Yeah? Therefore, I will deselect it because the main driver is the 200-day cycle here, and doesn't matter if you add the 230 into the mix. The timing will not mainly change here in that regard. But so what's the point here? So what should we take into consideration here with talking about the 200-day cycle? So just going back into the analysis, the 200-day cycle, this is the point. So I'm now moving back into the summer period. So the light blue data is not known by the analyzer. And you see here in the analysis, then the 200-day cycle was identified all over the time. And I told you at 30K, we need to, we should await the next upswing in Bitcoin, which then happened right on time. And we monitored this here on the channel. And 2 weeks ago, Yeah, we updated our analysis, so let's go somewhere here. I think it was end of August, somewhere here. It's not as important to deal with the real day here. So that's the point. I think 2 weeks ago where we had the session, and there I said to you, we have now reached the midpoint of that cycle, and these are always important points in time where rhythms might change in markets. So that's hard to explain, and there's no real, or that's a kind of behavior we monitor when dealing with cycles, and therefore we need to research it a little bit more. But from our experience, the midpoints, from a timing perspective, if I talk about the midpoints now, we're counting now the way from this, with this low here to this top. Yeah, and if you divide this by half, this is the midpoint somewhere here in this cycle. That's the midpoint of the cycle. Yeah, and we arrived at this point by end of August. So therefore, 2 weeks ago I mentioned that. At this point in times, these cycle projections can go out of sync. Or if cycle projections go out of sync, in most cases, it happens at the midpoint of the last dominant cycle you have been detected. We don't know yet, yeah? So we can't decide yet if this cycle is out of sync. There are still some strong evidences from the past analysis that the 200-day cycle is a very important cycle, which in this case should lead to much, much higher projections for Bitcoin into late October. However, the midpoint now stopped the current or the strong upcycle we anyhow anticipated here. So we cannot say there is, and if we update this now to the current day, yeah, the 200-day cycle is still there. So it's not invalidated now. And even though there are lots of cycles in the spectrum here, so I will not explain why I especially picked the 200-day cycle. The reason, if you revisit the analysis on cryptocurrency for each parabolic move, so that's always interesting. In Tesla, we just had this one parabolic up move. In Bitcoin, if you deal with history of cycles, we had several situations where we already saw parabolic moves in crypto assets, and therefore we can learn from these historical parabolic moves. And therefore, the 200-day cycle is important. Still not ended. We don't see any other key dominant cycle here. So even if we add the larger ones, so there might not now be this disruption taking place. However, I will still count the 200-day cycle to be the most dominant we can see. It looks like at these midpoints, again, interesting movements occur where we can't explain it from the root cause, but that's a common behavior. So if we want to take a lessons learned anyhow, if you've identified a dominant cycle and it's on track, as we are since summer here, as projected, it's always interesting when you approach the mid-cycle point, timing-wise, pay close attention, or if you are using this analysis for your projection or your current position in the market, adjust your risk measures. So the risk might get higher that this cycle projection will fail. So therefore, you must adjust your risk management if you use this kind of analysis in the markets. So it's not about an in and out. It's about adjusting the risk if you use the cycle projection here. Okay, but in general, no change to the overall 200-day cycle. Okay, so that's it for today. We have been running this half an hour. As promised, I talked about these two topics. Yeah, this is just, I want to talk about these two topics for today. Tesla specifics of spectrum analysis, why you won't see cycles in a spectrum. Second, short update on the current 200-day cycle in the crypto assets. I don't know if the live chat works because we had this network issue in the live session today. So therefore, at least on my end, the live chat seems not to be updated. But I see some questions. Sorry for that. I just need to realign again. Okay, Jim, so there is one question around, I will read it. Question: how do you handle a dominant cycle which is about 50, but active cyclist has 57 and 44 as two closest choices to pick from. So the situation might be for related to the question is that you have, or you know about the main rhythm is about 50, or we can also call it a nominal cycle with a length of 50. Maybe we know from other forces or other rhythms or historical analysis. So there should be a nominal cycle around 50. And the spectrum shows us one at 57 and one as 45. So let's assume, or let's assume this here. So there is a one at 45 and a one at 48. Yeah, so these two here. And you should know that there's, from whatever reason, a cycle with a length of 50. So what I'm doing in this case here, activate one, for example, start with a shorter one, 44 or 45 here in this case, and then see what from the projection point of view. Yeah, you're always interested in the next important points in time. So the next important time here is you need to check if it's on track on this movement here, and then the next projection is a top here around end of September. And then switch to the other one. So the other one is then 58, and see what this projection here tells you. This is a similar movement, but this next top here, or this would expect here close to a low and then an upswing, which is the other one showed we already in the upswing. And this is here projecting into mid-October. So, and if you can now activate both here, and if they are close, yeah, so at least you can add both to the mix here, but you won't have a clear clue here. So, but the combination would bring you to an top here around beginning of October. So it's exactly in the middle of both individual tops here. So at least, and if there is, they are more or less in sync. There's just a slight deviation between these two cycles. Yeah, one pointing to a top in end of September and the other one mid-October. So you don't know if this is the 44 right or the 55 right. But anyhow, you should expect the cycle top for the nominal cycle with a length of 50, because that was your question, topping around beginning of October. The 44 shows you end of September. The 58 showed you mid of October. So the nominal cycle of 50 should top around beginning of October. So that's how you deal with this kind of situation. I hope this answers this question, Jim. And Mark, your question was, so you're saying that Bitcoin has inverted? No, not yet. No, not yet. So the current situation does not give us this clue. So we can always pause in the cycle upswing. So right now we are the upswing has paused, which is also possible at the midpoint. So right now we can not say that the cycle has inverted, but this could be a behavior. So the inversion of cycles is also a phenomena which needs more research, and there are different explanations or reasonings out there. And the cycle inversions, similar here, often happen at these midpoints. But right now, we cannot conclude that this cycle has inverted. That's important. We don't have enough information on that yet. So therefore, I said the 200-day cycle is still valid. It's still happening what I was more or less also expecting 2 weeks ago. Yeah, as I said, and please review the session. Be careful at this midpoint now. So now and therefore the risk assessment or your risk adjustment 2 weeks ago. So if you had traded this upswing, a close stop, which would brought you out of the trade 2 weeks ago. That's what I mentioned if I deal with risk management before we approach the half point, which we announced here live on the show. You need to adjust your risk management. We cannot say clearly if an inversion took place, Mark. Okay, so that's my two answers to the main questions I can see in the chat here. So thanks for joining me. Please excuse the technical hiccups we had in today's live session based on a construction site here in front of the office. But hopefully we recovered, and hopefully you learned something and you liked something on the cycle analysis in regards to spectrum, in regards to cycle midpoints, in regards to current data on Tesla and Bitcoin. Thanks for joining me today. Do me a favor, like the session, subscribe to our channel. This helps the foundation to grow. We need to get more intense discussion. So please join the live chat. I always like to get feedback to see what you're interested in. As of today, I switched to the Tesla situation based on the current question. So that's the way. If you want to have a specific analysis, drop in your question, join the chat up front so I know what you're interested in. And we will meet next week, Monday, same time, same place. I'm happy to meet you again next week. Have a safe week, stay safe, and we will talk soon. Bye.